Welcome to the next episode of Navigating Carbon, your compass to carbon management. As always, I'm your host, Deb Ryan, and in this week's episode, I sat down with John Melby. John is the CEO of Xpansiv, one of the world's leading exchanges and registries for environmental trading, which includes carbon markets, renewable energy credits, and clean fuels. John and I talk about a wide range of topics impacting energy transition markets, including how power markets are changing, the convergence of compliance and voluntary markets in the carbon space, and the rise of clean fuels and the importance for transportation. We also cover topics like transparency and trust and why these are so important to the markets. John also gives us some of his thoughts into what he thinks will be the next big things to look out for. To stay on top of all upcoming conversations, please make sure you like and subscribe to the channel. But for now, sit back and enjoy my conversation with John. Hello, everyone, and welcome to the next episode of the Navigating Carbon podcast. Today, I'm joined by John Melby, CEO at Xpansiv. John, great to have you.
Thanks, Deb. It's great to be here.
Yeah, really appreciate it. So, for those that aren't familiar with who Xpansiv is and what you guys do and the role you play in the market, let's start there. If you could give folks just a bit of an overview.
Sure. That sounds great. Xpansiv is the leading international infrastructure provider for global energy transition. So what that means for us is we enable transparency, price discovery, trading, portfolio management across a number of assets from carbon, renewables, fuels, digital assets, and water.
Yeah. And we're going to dive into some of that, the transparency and some of that kind of stuff as we kind of talk through this and stuff. But I wanted to start with you guys held quite a few events at Climate Week recently and in New York and stuff like that. And so I was really curious with some of your takeaways and stuff. I know the theme of the event and the week was around AI and energy for AI and stuff like that. Like for you at Xpansiv, like what does with the whole conversation around AI and the need for additional energy and stuff, like what does that mean for you? And, kind of what were your takeaways around that particular topic?
Yeah. So obviously AI is a subject of conversations everywhere today. And you look at what Expansive does, we're providing infrastructure to support these markets, both on the carbon and the renewable side, but also just in the power side. AI is a massive impact in our marketplace, and it hits on a couple different directions. One is just the power use and the need for additional power. Some stats that are just mind blowing to me. You have in 2023, 4.4% of all the electricity used in the United States was for data centers. And that's obviously the data centers being driven by AI, the growth in that. And in 2028, the expectation is it'll be between 6.6 and 12% of all the energy used in the US would be for data centers. To give you a sense, that 4.4 percent was 176 terawatt hours. So at the low end of that, the increase goes to 325 terawatt hours. I'm sure most of the listeners here don't think in terawatt hours. So maybe I can give a second
Yeah.
on that. A terawatt hour is 1 trillion watt hours. 1 trillion watt hours equals about what 95 million homes use for electricity.
In
So
a
if you think
year
about that
or in a day?
in
Or,
a year, of course, a year, yeah.
yeah.
So the so that's the equivalent then. That increase at the low end is the equivalent of 114 billion homes. Uh, these numbers are just mind blowing to me. And obviously that's significantly more. Hard for me to wrap my mind around it. When I saw these stats, I thought people were getting uh, terawatt and terawatt hours wrong. Because they're just so big. But this is the numbers that are coming out of a number of different reports. So when you think about that, it really changes what's happening in markets. And this is not just the US, this is happening around the world. So we do a lot of work with renewables and power globally. So we're participating in markets in Southeast Asia and Africa and Europe and the like. And it's the same trend everywhere. Data centers are being built, around the world. And you start to think about this. Most of the developed world or industrialized world has seen load growth be flat for a generation. I first got involved in electricity markets in the 90s, and around that time is when load started to flatten out. So energy efficiency, things like light bulbs, better buildings, and so on. Certainly in the United States, basically flat load growth for the last 20 years. I just saw another stat where it's expected to grow 40% by the 2040. Uh, Even if these numbers don't occur, you see a trend happening that's just mind blowing. And all the utility executives, literally all of them, have worked their career in an environment where load was not growing, and all of a sudden we have this explosive load, and it has all kinds of im- uh, impacts on the world. Everything from obviously the need to build new power plants, the need to figure out how to clean those power plants up, water use, all these things. So
Yeah.
it's a mega trend that it's hard to overlook.
Yep. And then, in terms of some of the things, you talked about the way that you guys are working in the power markets and things like that. Like, explain the importance of renewable energy credits or RECs as part of this, overall increasing power demand. And where do you kind of see that market going for the
Yeah, I
new?
mean, definitely the surge in demand for electricity uh, is really fueling the global renewable energy credit market. So you think about all these data centers and all these companies that have made the commitments to uh, use renewables. And there's a couple ways you can do that. You can build a renewable facility right on site. That's very, very difficult to do. Lots of reasons it's hard to site. It's true across energy markets globally. Another is direct contract with a renewable project. So there a lot of them are starting to do that. You see that a lot of news on that with the hyperscalers. And then the third is to buy the attributes associated with it. And then the latter two, including the direct purchase, the accounting function is really using the renewable energy credits. So how do I prove that this megawatt of power, the attribute associated, say for instance, a solar facility, was used by an end user, in this case, the data center. So that data center then would have to be able to prove that it had this certificate. And how do you assure it's not been double counted? That's really what the registries do, provide that trust. So we at Xpansiv are the largest registry operator for renewables globally. So we operate a number of those systems around the world, and we support that market infrastructure to allow that accounting to occur. It also enables another mechanism where people can trade those credits. So if you have a wind facility, for instance, you can then monetize that credit by selling it to an end user, because obviously the electrons go into the grid and they go where they go. So how do you
Exactly.
track the
Yeah.
attribute? And that's really what the renewable energy
Yeah.
credits used for.
Yeah, no, I think it'll be interesting to see. The rec markets have obviously been around for a long time, but yeah, again, coupled with the growth in the electricity, it'll be interesting to see what then the growth in that market and the use of those instruments and stuff looks like. So, one of the other things that I know you guys had at some of your Climate Week events and are starting to look at is around clean mobility. Like, can you explain? Like when you guys say clean mobility, like what do you mean by that? And like what's developing in that space?
Sure, I actually think this is one of the more interesting areas in the energy space, and that's really the how do we clean up the transportation fuels? Uh, the main program in the United States is called the Low Carbon Fuel Standard, or the LCFS program, and Xpansiv's platform supports that. Really, what that is clean transportation credits that are utilized for alternative fuels, electrification of transportation, things like that. So we support that infrastructure. We also have a, a, a partnership with Eco Energy, and they have a program called Turks. Turks stands for the Transportation Emission Reduction Collaboration. And really, what that does is it covers a whole slew of areas that aren't regulated in the same way. The LCFS program started in California, like a lot of environmental programs, and it started to move to a number of different states and countries for that matter. The Turks program has been set up to support that in areas that don't have that underlying infrastructure. And we're really seeing interesting growth in that when you start to see the big box stores that have major use of fleets of trucks, the transportation companies, the delivery companies, things like that, that are really trying to address their scope 3 emissions. So that's the next level emissions um, with EV charging stations, renewable diesel, things like that. So these are all tools to help companies manage, report, and then ultimately drive investment into cleaning up the transportation fleet.
Very cool. It'll be interesting to see again, LCFS has been around for a long time, and so it'll be interesting to see the growth of that both here in the US and internationally, because there's a lot of conversation about what the IMO, the International Maritime's doing on fuels and all sorts of stuff, Corsia with airlines and stuff as well. So it's definitely a sector that's seems like it's getting a lot of attention these days. That'll be,
Absolutely.
yeah. So thinking about like sort of, yeah, some of these then ongoing market developments and some of the stuff that you guys are working on, I know there's been continued conversation about the difference between compliance carbon markets and voluntary carbon markets and stuff. And I know you put out something recently around how we're starting to see a little bit of a convergence of that. And again, Xpansiv's role in terms of being the registry for a lot of these credits and allowances and stuff. Like, where are you seeing that kind of where the market kind of shifting around carbon in particular?
Yes, yes. So I think this is an interesting theme that we've been very focused on. So very much the difference between compliance and voluntary is blurring. So you see a couple programs, for instance, in Australia under the ACCUs, where it becomes a compliance program. And as you mentioned, Corsia is the airline program. For those that may not know, uh, where the airlines came together, realizing that if they had a plane that was taking off in Paris and landing in Montreal, then landing in California, then landing in Australia, they would have a series of different compliance programs, and it could be very difficult to manage through. So they came together to create a program where they effectively capped emissions for the airlines, and then had a couple different mechanisms to reduce those. So the first being the uh, the reduction in flights. It actually happened because it's right around the time COVID occurred. No one expected that. That was certainly not the first plan, but obviously flight had fully recovered. Airlines fully recovered from that. So then you have sustainable aviation fuel, which is something that we are also involved in. But sustainable aviation fuel will take some time to grow to scale. Um, and then you obviously could improve the uh, efficiency of planes, and there's always work on that for lots of reasons, but that just takes time. And then the third was the utilization of credits. So those credits that had been previously in voluntary markets are used in Corsia as well, a subset of those, of which we created a series of products around that really on our exchange CBL trade, and then we've worked with a number of other nations. So we see the Corsia market is a prime example of that, but you see it also happening in places like Singapore. It's around the world. Really, that convergence of compliance and voluntary markets, where it's almost as if uh, the compliance, the voluntary has paved the way for the compliance market, which is always the plan, but also the compliance markets have helped define quality in those voluntary markets, and those two markets then converge.
Yeah, and we'll talk about the quality piece here in a little bit. But like thinking about then the country aspect, how are you guys working as countries are continuing to build in compliance markets and stuff like that? Like, then how are you guys working with those different areas, and are you continuing to see that kind of growth of different countries standing up markets and things like that as well?
Yeah, absolutely. So we operate across a number of different parts of the market infrastructure. So, we talked about a little bit here. We are the largest registry operator. We also provide exchange technology. So we operate the largest spot exchange for carbon and RECs globally, and also increasingly into fuels. With that, we've started to work more and more around the world. I think about a year and a half ago, we partnered with the Johannesburg Stock Exchange, which is the uh, stock exchange, but also derivatives markets for Africa or South Africa. But they're the largest exchange operator on the continent. So we partner with them. We're also then increasingly working in the Middle East. So last year we launched, at the end of last year, launched a partnership with PIF in Saudi Arabia around a program they have, or a company they have, called the Regional Voluntary Carbon Market Company. And we built out the infrastructure, and that's been a really good partnership with us to help us, or for us to work together in Middle East and North Africa, providing infrastructure for those solutions. At Climate Week, we announced a partnership with the Korean Stock Exchange, KRX. So you're seeing increasingly around the world these efforts develop. And our model very much is to partner with the leaders in each one of these areas with the idea of helping scale the energy and environmental markets, the energy transition, really.
No, that makes sense. That's really cool. And then, like, thinking about partnerships, I know you guys recently announced that you're partnering with B Zero, one of the leading rating agencies and stuff. And we talked about, like, you mentioned before, like, with the compliance and the voluntary starting to come together, that increasing quality and stuff. So just talk about the importance of that partnership and of ratings and things like that on and what that's helping the market, or if that's helping the markets kind of evolve a little bit.
Yeah, I think Expansive and B Zero and the other rating agencies are really aligned in that we want to see confidence and trust in these markets. And our role is to help provide credibility and transparency in the markets. B Zero really enhances transparency and trust in these markets by doing the ratings work that they do across um, the carbon credits. And it's difficult uh, as a buyer of a carbon credit uh, to look at a project and understand it. So having those trusted ratings are really helpful. So we're proud to be partnered with B Zero. You're not exclusive to them, working with other agencies, but B Zero as a leader in there. And we've integrated that into a platform that's part of our market infrastructure that we call Xpansiv Connect. So Xpansiv Connect connects into, hence the name, to I think 16 or 17 registries today. So it's not only registries that Xpansiv operates, but third-party registries, and that really enables customers to go into one place and see all their assets across all those different registries. The partnership with B Zero enables those ratings that are on those new projects to be seen on that screen as well. So it really enhances that connection across the carbon markets, and we do similar things in renewables and
Yeah.
fuels.
And I'm assuming then with that kind of like infrastructure, being able to see across the registries for all sorts of things, whether it's carbon, whether it's RECs, whether it's fuels and stuff like that, for particularly for a lot of these global companies that, and you use the airplane as the example where, they go through different countries and stuff. But I'm assuming, and is the point of that really trying to help companies then manage their own, like, assets and figuring out where they've got different stuff and different instruments, because I can imagine that gets quite complicated for companies to try and put it all in one place. So is that kind of the point of that system?
It's exactly it. That system was initially developed to help manage across the renewable markets. So you would have a renewable asset, say in California, another one in New Hampshire, and another one maybe in Singapore. And the system then can show you all your assets, show you what so you can put in your trades, and you could say, I have to deliver this, and it would show you which ones can go into that contract, what qualifies for it, and the like. Then we started pushing that in the carbon markets, and that really enabled the development of standard instruments. CORSIA eligible products. You can see all the credits that you own that qualify into the CORSIA program, all the ones that qualify into, say, the key carbon or, principles. So you'd have the various different programs that exist out there, and you'd see that, and that's really grown. So we have over 1 billion assets go across that. To give you a sense of that, about 400 million of those are carbon offsets. The world last year retired less than 100 or less than 200 million carbon offsets. So it's more than double the whole market. So you can see how it's used for over-the-counter transactions. And what's interesting about these markets is you have a lot of entities that wouldn't otherwise transact with each other. So it could be a project developer in Cambodia who's then selling their credit to a German utility. So to be able to have an infrastructure that's trusted, that can assure transfer, it makes it much easier for it takes away delivery risks, things like that. And so that's why we've seen massive adoption
Yeah.
across that product suite.
Yeah. And the ability to know then, of your all of the different assets that you're looking at and stuff like that, like what goes to what programs and around the world and stuff like that as well. Cause that's a huge challenge for companies trying to manage all these different compliance and regulation and, industry regulations and all that kind of stuff as well. It gets complex quickly. So
And, and,
for sure.
and more reporting's coming out.
Yeah.
So as you were talking about the shipping industry and IMO or airlines, or if you're a manufacturer in, just say you're here in the U.S., You may not have reporting requirements in the US right now, but you'll have reporting requirements wherever you deliver it. So if it gets delivered in Australia, it gets delivered in the Southeast Asia or Europe, all the different reporting requirements. So how do you get that data in a system of truth? And that's what these systems are beginning to address.
That's awesome. So one of the other things I wanted to ask you about is like new asset classes that you're seeing coming on. I know I've heard a lot about like water and stuff. I don't know if you guys are starting to see that, but I'm curious, kind of like what's beyond just the fuels and the renewables and carbon and stuff like that. Like, yeah, what else are you guys starting to see popping up? And
Yeah, yeah. So on the waterfront, we operate a water exchange, and have for a number of years. It's focused on the eastern half of Australia.
okay,
So
I've
that
spent quite a bit of time there. It's quite
yeah
quite
yeah so,
important.
yeah so we're the largest exchange operator for water markets there, and that's the largest water market in the world. Um, with the theme that we talked about in the beginning, though, AI really driving water use, coupled with just the already scarcity of water around the world, we're seeing increasing interest in water markets. They're difficult to set up from a regulatory perspective. You need a strong conviction like Australia had around a major drought that started that to really get it going. But it's something that we're certainly very interested in. But we've recently launched also registries for biofuels, for hydrogen, carbon removals. We're seeing these are all our growth areas, and also mentioned SAF, sustainable aviation fuel. You see these markets all emerging. They're in their early stages, so hydrogen's not new, but green hydrogen is relatively new. So how do you track that? So we're operating in those types of markets, and we really see fuels as a massive growth area, transportation fuels in particular.
Very cool. So I wanted to talk, you talked about right at the top about the need for integrity, particularly transaction integrity in the infrastructure. And you recently, I was reading something that you put out around recommendations for integrity and things like that. But can you just, for folks that aren't as familiar with, the registries and the exchanges and stuff, like why is that transaction integrity so important? And like, what are some of those recommendations and things that you guys are putting out into the market as people are starting to buy assets and participate and things like that?
Yeah, I think the core of these markets is really, well, any market is trust, but in these markets, you're trading a certificate that often is the absence of something or the attribute of it. So in a renewable, it could be the megawatt of power, but how it was created. Was it from a geothermal? Was it from nuclear power, solar, whatever? And so you're trading this certificate. So you need to have a trusted mechanism for doing that, and that's really what the market registries we provide do. And in carbon, it's sometimes even harder. Some of it's easy to wrap your brain around, like direct air capture. There's a meter on something, and you can see that. But in other areas, it may be deforestation. So effectively, what you're trying to do is um, capture the absence of something, that would otherwise happen. So you have to have strong protocols, which is what the standards do. Uh, and then you have to have strong infrastructure that people can trust. So we really sought out to build that infrastructure that would look similar to other commodity markets where billions or trillions of dollars transact on a regular basis, but um, uh, focused on the needs of the specific market. So we've spent years building out those types of systems. So you get things like SOC 2 audits and various activity, but they continue to evolve. So for instance, you talked about AI earlier. You're starting to see more granularity in renewables. So we now support uh, 24-hour, hourly recs, things like that. How do you make it so that you're sure you're transferring the right things, these types of systems? We've also worked on interoperability quite a lot. So we co-shared the World Bank's Carbon Market Initiative, and that really looked at things like the use of AI to to look at transaction integrity, digital MRV. For those folks that don't, that's really how you track things, making sure that's digital, not clipboard driven type thing, and really making sure that the markets are scale and that trust and confidence is at the core of them.
I like that. So as we kind of wrap up, I'm curious, like, what's on your radar for like, what excites you? What are you looking for? What's coming down the pipeline in the next kind of, I don't know, little bit, few months, years? I mean, these markets move so quickly to a certain extent.
Yeah,
Yeah.
yeah. Maybe if you indulge me just a second, if I give you
Yeah.
my background, my grandfather and my father were utility executives, electric utility executives, or my executives employees, and I had no interest in getting into the electricity markets because I thought they were so slow and sleepy. And then I got involved in energy deregulation that happened in the 90s, and it was chaotic, massive change. The whole way in which we use and transact electricity, not just here in the US, but in a number of markets around the world, changed. Got very involved in that. Uh, that I would say was the biggest change in the electricity markets. And then, as I mentioned, the market sort of got flat, so there was movements towards renewables. The world definitely is moved from very little renewables to most of the developed markets are about 30% renewable today and growing rapidly, but not massive change in those markets over the next 20 years after the initial deregulation sort of sorted itself out. Now with AI and an imperative to clean up the grid uh, and the electrification of everything as part of the sort of reduction in carbon, there's a change in the way we use electricity that's mind blowing. I mentioned before an expected 40% growth by 2040. Uh, it is super exciting time to be involved in these markets. And if young people starting their careers, we're all charting a new path, and that is incredibly exciting to me. So we're focused on trying to help that electrification of the economy, and that's a global phenomenon. Uh, at the same time, we see the transportation fuels, hydrogen, clean fuels, and as I mentioned before, we look for more transparency, start seeing granularity and rec tracking to align with the corporate goals. And then that theme that you mentioned before, the convergence of voluntary and compliance markets, really to support the national goals around energy security, and then also climate policy. So it's a
Love
really
that.
exciting time in these markets.
Yeah. Well, and I love, I think more and more, and correct me if I'm wrong, but more and more it's difficult to separate the energy and the decarbonization or the energy and the climate conversation. At least I'm definitely seeing that. And that for me is also really exciting. And I think you guys are well positioned to be like right in the thick of it, so which is great. So, John, thank you so much for joining me today. It's been great.
Great talking to you too, Dan.